Coming off a 3-day holiday weekend, stocks were off to a rough start on Tuesday. The Dow Jones down 543 points, about 1.5%. But the real damage on the NASDAQ, that index tanked by 2.25%. Although the Russell 2000 was actually down by over 3%. But I think inside the NASDAQ, the stocks that got hit the hardest were the biggest winners of 2021, the most overpriced momentum stocks, the ones that comprise the portfolio for the ARK Innovation Fund. I've been talking about that. Cathie Wood's flagship fund down another 4% today, ARK Innovation. It's now down 52%, I think, from its high last year. But as bad as the bloodbath was in the stock market, it's even worse in the bond market. In fact, I think it's the bond market that's driving the stock train. Bonds are off to their worst annual start ever. I think for the stock market, this is just the worst start since 2016. I think maybe it's the third worst start over the last 30 years. In fact, both the NASDAQ and the Russell 2000 are down close to 7% so far this year. But it's the bonds that are really taking it on the chin. I think today was the worst day for the bond market since March of last year. This is the highest yields have been in over 2 years, up almost 100 basis points today. The yield settled at 1.865 on the 10-year, 30-year 2.184. These are still very, very low yields, but what's important is the trajectory and how much higher these yields can climb. In fact, if you look at the forecast now, most people are expecting now 5 rate hikes in 2022. In fact, a lot of people think the first rate hike, which is going to come in March, may even be 50 basis points. So we would lift off with a 50 basis point hike. In fact, Bill Advocaat is one of the people advocating for the 50 basis point surprise hike. He's calling it shock and awe. The ridiculous part about it is that 50 basis points is almost as ridiculous as 25 basis points. It's not shock and awe when you're talking about 7% inflation. A move from 0 to 50 basis points is still recklessly low interest rates. And for a Fed that's actually serious about fighting inflation, raising interest rates to 50 basis points is not nearly enough for the task at hand. Yet given the incredible amount of leverage that's in the system, a 50 basis point rate hike can still do a lot of damage. And I think Bill Ackman is underestimating the extent of the damage, but not just the damage from the initial hike, but from all the subsequent hikes, which aren't going to do any good about slowing down this inflation freight train. In fact, look at the price of oil. I mentioned on my podcast last week that I thought we would hit a new high in oil prices this week. And we did. In fact, as I'm recording this podcast, we're almost at $86 a barrel. We're at $85.93. The market is still trading up $2.63 today. This is a 7-year high in the price of oil. But if you look at a chart, there is a lot of room for the oil price to keep going up. In fact, oil prices could be up more in 2022 than they were in 2021. And in fact, a lot of the energy cost increases from last year were absorbed by the producers. It's 2022 where they're going to get around to passing on those hikes to the consumers. So there is going to be a lot more upward pressure on the CPI despite the Fed's rate hikes. Even if we get them, even if we get more than the market expects, it still won't be enough to stop inflation from getting worse. And it seems clear that the bond market is slowly starting to pick up on this reality. Now, when it fully grasps it, the dollar will be tanking. It won't rally like it did today. Today we had some strength in the dollar, but at least the gold market didn't sell off. Now, it didn't rally, but one market that did was silver. The price of silver was up about 50 cents an ounce today. We closed around 23 and a half. That is a big move, especially on the day where the price of gold slipped about $5 an ounce. You don't normally see silver prices that strong unless you have a strong day in the gold market. But this really shows you the underlying strength in the commodity complex due to all the inflation that is already baked in this cake. But gold had a hard time rising today against that backdrop of surging bond yields. But at some point, investors are going to realize that surging nominal yields mean nothing to the gold market because real yields are not rising. The Fed is so far behind the curve. And even if real yields were rising, meaning that negative yields were becoming less negative, any negative yield is a positive for gold because you don't want to lose money in bonds, whether you're losing 3% a year or 5% a year or 7% a year. All of that is bad. You want to avoid losses. And one way to avoid losses is by owning gold. And more people are going to recognize that gold is a much better alternative than negative yielding bonds. In fact, negative yielding bonds are even worse than negative yielding cash because at least when you have cash, you're not losing the market price of your cash the way you're losing in bonds because bond prices are falling along with the value of the cash that they're denominated in. And in fact, one of the reasons that we had the big rally in silver today, and gold did rally. At one point this morning, it was down about $15 and it rallied. This was before the stock market opened because we got some economic news that surprised a lot of people in how weak it was. It was the January Empire State Manufacturing Index, and this number was at 31.9 in December, and the consensus was for a slight decline to 26% in January. In fact, the range of estimates went from plus 21 to plus 32.5. The number came out at minus 0.7, way outside of the range of estimates. In fact, it was a negative number. It indicates contraction. That is the type of number you get during a recession. And this is what I have been warning about the entire time. The Fed is now starting its tightening campaign as the economy is rolling over. The economy is getting weaker and they haven't even begun to raise rates yet. Look at the numbers I talked about for retail sales for December. I spoke about that on my last podcast. The numbers are getting weaker on the economy as the numbers on inflation are getting stronger. It is stagflation. This is the perfect storm. The Fed has got itself in a box. There is no way out. And the fact that the Fed is in this no-win situation on inflation should not surprise anybody. This was the most obvious outcome that nobody wanted to acknowledge. I have been warning about this since the beginning. You go back to 2009 when Ben Bernanke first came up with his cockamamie idea of quantitative easing and 0% interest rates. What did I say back then? This was going to unleash inflation, and then the Fed was going to be in an impossible position because it's going to be unable to rein in the inflation that it let loose.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.